Welcome back. Well, let's take a break from the equity markets. Talk about the commodity corner then. My colleague Manisha Gupta spoke to Ragnar Udd, the Chief Commercial Officer of BHP, to discuss the global trade picture and their business outlook amidst the tariff concerns. She began by asking about the company's first half performance and where is it headed from here on. Let's listen in.
I think what you've seen through our first half year results that we've just posted is actually a company in excellent position. We are positioned well in terms of the current environment, despite the fact that we've actually seen declines in iron ore and met coal prices decreasing by about 20%. Nonetheless, you're seeing a very healthy profit result being posted and distributions to our shareholders that fall within our dividend policy, and also a fantastic growth portfolio in front of us, reflecting our strong operational performance and capital discipline as an organization.
Rag, how would you look at the tariffs that are being thrown around, splashed around all over the world? Started from US, and then we've seen some retaliation coming from China. There's a conversation with Europe as well. What is your sense? How long could this go on? Do you see some of these being pulled back, as we've seen in most cases?
We're really taking a wait-and-see approach on this at this point. So obviously there's a lot of rhetoric and positioning that's taking place on this. Nonetheless, for ourselves as an organization, we think we're well positioned in terms of what the world's needs are going to be and also the commodities that are actually going to drive that. And for our perspective, we'll wait and see where it goes to, but overall, we think we're very well positioned as an organization.
The other important thing in the global markets to look at really is the currency volatility. And how are you reading into that? Is that impacting trade in some sense as well, or is expected to impact?
Look, volatility is a part of any business that you're a part of. And I think for ourselves as an organization, we feel we're well placed for what the world needs moving forward. So if I take a look at the geographies that we operate in, the commodities that we operate in, these are all multi-use commodities that can be used in a number of different facets, depending on where the world pivots to or shifts to. Copper is a great example. We see population growth occurring that will continue to drive the need for more copper. But in addition to that, we also see growth in copper coming forward in terms of AI and data centers and increasing expectations on that, and decarbonization continuing to be a focus that will need more copper as well. Now, we recognize that there will be ebbs and flows in any one of those demand signals over time, but that's part of being a company like ourselves that actually has a really solid strategy focused on those commodities.
Like, how are you looking at various geographies, as you spoke about, especially Asia and specifically India? How does that look in your whole scheme of things?
Really exciting prospects in Asia and India more specifically. What an exciting country. If I take a look at what's taking place in India, already the world's largest country with global GDP growth or GDP growth of over 6%, with a budget that's actually, I would actually characterize it not so much as a budget, but more a vision in terms of where India is going to. And when we think about the commodities we produce, whether that's in iron ore, where we see steel production in India potentially increasing from 140 million tons to a clear path to 300 million tons and maybe 400 million tons. This is something that we're well equipped to actually provide the raw commodities needed for that steel growth. We see copper growth in India growing fivefold over the next 25 years as demand for more traditional uses, data centers, and decarbonization comes forward. And even in potash, we know that the world is actually going to need more fertilizers to bring more food to the world, and this is something that we're specializing at and have some of the best deposits in the world to actually meet those needs.
If you look at 2024, Rag, it wasn't such a great year for metals. We did see highs, but we didn't close the same way. 2025 has begun on a stronger note as well, but the concerns about Chinese demand just about continue. Most people now tend to say that China will perhaps never ever go back to the kind of growth rate or numbers that we saw. But with the stimulus measures, expectations, tariffs ongoing, what's your sense from Chinese markets coming now?
Look, we're probably have a more of a strong view in terms of where China's going to. And you're right, the GDP growth rates in China have decreased from the 8% we saw a decade ago. But still, 4 to 5% GDP growth on the scale and size of China at the moment, that is unbelievable growth moving forward. Now, for ourselves, when we look at China, we still see steel production sitting at over 1 billion tons a year. 6th year in a row that they actually delivered that in calendar year 24. We expect to see that in the next couple of years as well. In terms of copper, there's an insatiable demand for copper concentrates in China and growing demand for copper cathodes as well. So while, yes, there have been some down signals in terms of housing, we think we've actually hit the bottom on the housing market. And in addition to that, the Chinese economy has been so resilient in terms of pivoting their steel use from housing into manufacturing, decarbonization products, and a whole host of other areas to keep that country moving forward. I expect that we'll continue to see stimulus measures take place, but I think that'll be in response and in reaction to some of those tariffs that you actually mentioned, if they take place or not. But one way or the other, we think China's probably best positioned to actually weather tariffs.
I want to talk about specific commodities now, and I'll start with copper, where we are looking at COMEX and LME price gap now standing at a 10%. Tariff concerns yet again. But what is your sense on demand going forward globally, and what is the price range that you are putting for copper for this year?
So copper demand is, we're expecting a 70% increase in copper demand between now and 2050. And the reason being, as I mentioned, those three pillars, whether it's traditional growth, data centers and AI, and decarbonization, all of those actually are providing signals that copper will actually be quite an exciting commodity to be a part of in the foreseeable future. When I come back specifically to BHP, that's why you've seen a 24% increase in copper production over the last 3 years, which positions BHP as the world's largest copper producer. And in addition to that, the growth pipeline we've got in front of us in Chile, South Australia, Argentina, and potentially the United States as well, we think that actually sets us up very well for the future and is bang on strategy, rock solid performance in terms of our operations, and this sets us up well for the future.
And you as a company, you seem pretty excited about potash. You forayed into that in a big way, and food clearly is a big market right now. Where do you stand on that, and what are the plans therein?
We see potash as a tremendously important commodity for the world, and the reason being is that we know that fertilizers are going to be indispensable as the world's population continues to increase. We're forecasting that the world's population will increase from 8 billion to about 10 billion by 2050, and that's going to require basically high-quality fertilizers to actually bring forward the crops and nutrients necessary with less arable land than in the past. Now, when we look at our deposit in Saskatchewan, this is a Tier 1 basin that we've actually developed with a lot of our expertise. It's the first new underground potash mine in that region in 30 years, which is enabling us to bring forward cutting edge and new technologies that others just won't be able to repeat based on the investments that are necessary up front. And we think this sets us up very well starting in 2026 when we get into production.
Rag, talk to us about overall commodities as a space as well, with so much happening in the background, whether it's about uncertainties with tariff, interest rates, currencies, geopolitics as well. How are you looking at overall commodities as a sector going forward, especially for this year?
Well, it's a really interesting point. And so as an organization, you've got to make decisions about what commodities you enter into and what you don't. And that's when you think about investments with BHP, you need to be thinking about what's the strategy and the long-term decisions that you've actually taken. And for ourselves as an organization, we've been very deliberate in actually maintaining our focus on bulk materials like iron ore and metallurgical coal, making sure those portfolios are right-sized for the future, but then actually segmenting our growth into copper and into potash, which we think have multi-use, multi-geographies, multi-customers, and we think that that will allow us to actually not only survive, but thrive in the environment that's in front of us in terms of this volatility and uncertainty.